So far this week, we have seen GDP revise down, and we have seen consumer spending in April fall, but at the same time, consumer sentiment did hit a 6-year high this morning. Now, joining me today to talk about this data is Jonathan Corpina from Meridian Equity Partners. So Jonathan, every time I talk to you, I feel like we're constantly talking about this conflicting data. So I'll start with the GDP yesterday for the first quarter. It was revised down from 2.5 to 2.4, and now we're seeing consumer spending drop a bit in April, which is surprising because usually consumers are getting their tax refunds back. What did you make of some of this data?
You know, it kind of goes back to what we were talking before in our last interview about the taxpayers getting their money back and starting to spend it. I think what's happening now is that back 3-4 months ago, people were getting a little too complacent with all the economic data and the outlooks moving forward. And I think now, as we're heading into the summer, we start to see a slowdown across the board in certain areas and certain sectors. I think people are just starting to be a little bit more sensitive as to where we're going to be third quarter, where we're going to be fourth quarter. We still talk about Europe, China, other exposures that's out there. So the sun is still shining. I just think investors are still waiting for the clouds to come over and feeling that it's going to come over sooner than later.
Now, consumer spending is about 70% of GDP, and we did see a pretty good retail sales numbers before, and that's about 30% of consumer spending. So for the second quarter, is there any concern, or is there more optimism?
It's a combination of both, because the concern is definitely there, because spending, budgeting, where my bills are going to be and how am I going to pay them moving forward are there. Optimism is there because we've still had these same concerns that we've had for the last year, yet our market seems to continue to move higher, and we portray this picture that things are getting better. So I think once again it kind of wraps down into where are we with jobs, where's the unemployment number going to come out next week, how's that going to really affect the sentiment, because all this economic data leads to that one end road.
Right, and also with the Fed beginning to start talking about pulling back on that QE, and now seeing some of this recent data with GDP kind of being revised down, do you think they'll kind of pump the brakes and maybe not pull back on that quantitative easing just so yet?
These are all just ingredients into this big recipe of this product that they're putting out. It's going to come down to looking at every piece of data that's there, throwing that unemployment number on top, and seeing exactly what's going to happen and how that's going to affect our economy. If the unemployment number, if we have another 2 months, 3 months of a trend in which we're seeing that the unemployment number is softening, I think the Fed is going to have to really evaluate when and how there is going to be a pullback in this. They know that they've just slightly mentioned the word softening or pulling back, and the markets have gotten very edgy and volatile. So I think they learned a little bit of a lesson on their last statement to be very careful about what they say and how they say it, but still deliver the right message and accurate information.
And finally, today is the last day in May, and all the major indices do seem to be up for the month. So with the whole sell in May, does that seem not to be the case just so yet?
Right, I think we spoke coming into May about this, and that's just a cliche saying. I think people have always have hung their hat on. It's the beginning of the summer, and people go away for the summer. Our markets have changed, our economy has changed, our mentalities have changed across the board from Main Street to Wall Street. So sell in May, go away, I don't really think pertains to where we are today. I think we're going to continue to see this market to move higher, and if people don't start selling, it's going to continue to go higher.